Hey traders, what if I told you there is a secret candlestick pattern that could predict reversal in markets? This pattern is proven to always show up before price reversal. The secret candlestick pattern is pin bar. What is a pin bar? A pin bar has following characteristics. A small body. And second thing to see is long wick in either direction. But in some cases no wick is spotted at top, but not necessarily. Like this example here. Now, you all must be wondering, what is the difference between a pin bar and a hammer? No difference. Why does a pin bar cause reversal in market? It is just a candlestick pattern that signals reversals going to take place. Now, let us see this on charts and understand more clearly. Here, first thing you must know is why a long wick is spotted. It is simply because the sellers pushed it downwards and later buyers got powerful and moved the price upwards. Pause this video and take a screenshot of this pin bar structure. A pin bar tells a reversal is going to take place, but this is not true always. It is not a guaranteed one. A perfect strategy does not exist. There will always be a possibility of failure. That is why we place a stop loss every time you trade. This will help you not to blow up your account. There are two types of pin bars: bullish pin bar and bearish pin bar. Bullish pin bar indicates price will move upwards and bearish pin bar indicate price will move downwards. Now the most common mistake I see traders make is that they focus on color of candlesticks. The only thing you need to focus is the direction of the wick. Whether it is up or down, the direction of wick represents the rejection it came from. For example, the wick here formed is at the bottom, which means the rejection came from bottom and price is likely to move up. Now the next question that comes in your mind is, why are the wicks formed? It is because of one reason only: the fight between buyers and sellers. Here, first the price went down cause sellers were active, but later the buyers started buying more actively and moved the prices upwards, and hence the wick was formed at bottom. Here, first the price went up because buyers were active, but later the sellers started selling more actively and moved the prices downwards, and hence the wick was formed at top. Now please remember, the color of the candle does not play an important role. Only check the direction of the wick. How to take trade using pin bar? Now here the biggest mistake traders make is they enter based on this pin bar pattern only, which is wrong. Reversal in market does not take place based on one candlestick. There are other supporting factors. Let me explain this with two setups. Setup number 1. Here bullish pin bar was formed, which tell us that market will move upwards. But instead of moving up, it went downwards. Market did not react to this pin bar. Does this mean this strategy failed? No, it did not fail. Let us understand what went wrong with our setup number 1. For this we have to understand setup number 2. Here, like previous setup, a bullish pin bar was formed, but this time a support was also present. Now if you are not able to understand how to spot support and resistance, watch my support and resistance video. With having pin bar and support level in this setup, this becomes a high quality setup compared to setup number 1. How to spot a high quality setup every time? First step is to find a key level. Here the arrow shows that the price went upwards and then started moving down, which created top for us. And then the price started moving up again. Draw a line from where the price went down and keep an eye on this level. But don't take a trade until a pin bar is formed at this resistance level. Once a pin bar is formed, this gives you enter. A bearish pin bar looks like this. First here price rejecting key point. Second, price is touching the key level. And third, confirmation pin bar formed at key level. Now with all these confirmations, you can short the market with a stop loss above the wick high. Always take previous low as first target. Now let me add another factor that will make this strategy even more accurate. Bearish pin bar spotted at resistance level. There are chances of market will reversal, but let me add another factor, that is trend line. This is called confluence. What is confluence? Having 3 or more confirmations. This is an example of confluence. Now let me summarize. The pin bar is really an effective candlestick pattern for traders to master, because it helps us to understand rejections in market. Do not trade the pin bar alone, always look for another factors to increase your win rate. If you enjoyed this video, please like and subscribe. Also comment topics for next videos.